Right traders, I'm resuming the video and I'm recording a short setup, which is a reversal pattern. We have a new high first entry long, second entry long failure. I'm scalping for 8 ticks, 2 points. Stop loss goes 1 tick above the signal bar. Okay, so we got filled. So I'm gonna place my stop loss to break even. This is a runner position. And what the structure told me here, well, number one, as a price action trader, I need to zoom out. So I'm gonna zoom out and I can see the whole day price action was stuck in this trend range. Okay, this is a clear trend range, EMA super flat, consistent pricings up and down. This is as healthy a trend range as it can get, which means I want to apply range rules, buying low, selling high, and I expect for most breakouts to fail. We had a strong uptrend break push to a new high. This was quite bullish, so I really wanted to see that reversal pattern because we came all the way from this bottom to the top without breaking the EMA. It was quite bullish. We have a highest high micro double top, first attempt to go long, pullback, second attempt to go long, failure. Once we had a break below this bearish bar, this is a reversal pattern. The two attempts to go long is going to trap traders. This second entry long is going to trap these bulls because this uptrend has a break in new high. So the late buyers are going to get trapped going long, but smart buyers know they already took profits because they were breaking new high. So we have a reversal pattern. It's right off of this key level. Okay, it's right below EMA and it's confirming my downtrend. So everything aligned. I'm working with the context. I sold after breaking new high. I waited for push below EMA. Textbook reversal pattern, great signal bar, and now according to range rules, I expect market to go all the way to the bottom, where you can consider buying again. So let's see if we can get some decent runner. A lot of people out there, they're saying that the past price action doesn't really matter. That's not really the case. The past price action is extremely important because if I'm going to take a look to the left, I can see we were in a range the whole time. So because I know what happened to the left and that we were in trend range the whole time, I know that I can buy low and sell high. So looking to the left is helping me to predict what's going to happen right now, currently to the right. Because most breakouts fail, this is a healthy trend range, and this is a reversal pattern. So I'm going to take runner somewhere around these lows. Hopefully we get some juice. It's going to be around 11, 12 points, hopefully 10, 11, 12 points. So hopefully we can get some decent runner. Right, traders. So we managed to get 12.25 points. Fantastic trade, reversal pattern, 12 points down to the bottom. The reason why I decided to tighten it like this, because if I'm going to zoom back once again, this is the approximate area where smart buyers are stepping into the market. A lot of sellers like me, they're probably taking profit. I can also draw tighter channel with a break new low, so I'm just going to play it safe. This was a trend range, and simply odds are higher. The market's going to have some stronger pullback, and I don't want to risk it. So I decided to take the runner around these lows, pretty much milking as much as I could. So this was a demonstration of reversal pattern in a healthy trend range. I hope it was helpful and educational. Good luck with your trading.